Hey everyone, welcome back to Corporate Decoder. Today DCO just filed an 8K and I'm seeing a big red flag about their past financial statements. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is saying that some of their previously reported financial numbers are no longer reliable and they need to be restated. This is Ducommun Incorporated and they are filing a current report because something important has happened. The main story here is something called Item 4.02, which is about not relying on previously issued financial statements or audit reports. Basically, Ducommun found an error in how they've been reporting their finances, specifically when it comes to stock-based compensation. So what happened? While they were working on their first quarter of 2026 financial statements, management found a mistake. It's about how they recognized expenses related to stock awards given to employees. The issue is with how they accounted for changes made in April 2024 to agreements for performance stock units and restricted stock units. For employees who were already eligible for retirement by the date they got the award, the company should have recorded the entire expense right then. On the grant date, for employees who would become retirement eligible during the time they had to wait for the award to fully vest. That expense should have been recognized from the grant date up until the point they became retirement eligible, not spread out over the whole normal vesting period. This mistake means that certain earlier financial reports can no longer be trusted. This includes their audited financial statements for the full years of 2024 and 2025. These were part of their 2025 Form 10K filing. It also affects the reports from their independent auditors. On top of that, their unaudited quarterly financial statements for several periods in 2024 and 2025 are also being called into question. These are the reports usually filed as a Form 10Q. Together, all these previously issued financial statements are now considered unreliable. The company explains that this error was not a cash issue. It didn't affect their sales, their profit margins, or how much cash they generated from operations. It is all about how they reported expenses over time. However, because of this error, Ducommun plans to restate its financial statements. This means they will go back and correct these past reports. They will do this by filing an amended annual report, specifically for the year ended the 31st of December 2025. This amended report will include the restated financial information for all the affected periods. So what does this correction mean for the numbers? For the full year 2024, their operating income was overstated by about $10 million. For 2025, it was overstated by about $3.4 million. This means their reported operating profit was higher than it actually should have been. Similarly, their net income was also overstated. For 2024, the overstatement is around $9.8 million, and for 2025, it's about $3.4 million. This suggests that the company's bottom line wasn't as strong as reported, and for investors looking at earnings per S-Hair, this means that figure was also overstated. For 2024, diluted earnings per S-Hair or EPs was overstated by about 65 cents. For 2025, it was overstated by about 22 cents. This directly impacts how profitable each share of stock appears. Now, this one is a bit more nuanced. Their adjusted EBITDA, a measure of profitability before interest, taxes, depreciation, and amortization, was actually overstated by about $0.9 million in 2024. But interestingly, it was understated by about $0.5 million in 2025. This means the impact on this GAAP measure is not uniform across the years. It is important to note that the company states this error did not affect their gross margin or cash flow from operations. In those years also, these restatements won't impact their ability to meet the terms and conditions of their existing debt agreements. This whole situation points to a serious problem, a material weakness in the company's internal controls over financial reporting. This means that the systems and processes they have in place to ensure accurate financial reporting were not effective. As a result, management concluded that their internal controls were not effective as of the 31st of December 2025. Ducommun is already working on fixing this. They'll detail their plan to improve these controls in an amended section of their annual report. They expect to file this amended Form 10K by May 8, 2026. Looking ahead for the first quarter of 2026, the company anticipates higher stock-based compensation expenses. They expect this to be about $5 to $6 million more than they previously thought. However, they don't expect this change to affect their total stock-based compensation expense forecast for the entire fiscal year of 2026. This suggests the increased cost in Q1 might be balanced out later in the year. Interestingly, the company's compensation committee expects to recoup some incentive-based compensation. For the fiscal year 2024, they are looking to get back around $4.3 to $4.9 million. For 2025, it is about $0.7 to $1.1 million. This clawback While it lessens the impact of the restatement on earnings, will be recognized only when the money is actually received, according to accounting rules. Let's dive into the numbers a bit more. Ducommun provides detailed reconciliations of their non-GAAP financial measures, like adjusted EBITDA and adjusted diluted earnings per share. These are ways of looking at profitability that exclude certain items to give a clearer picture of operational performance. Here is a look at the GAAP to adjusted EBITDA reconciliation. For 2025, their GAAP net loss was previously reported as about $33.9 million. After adjustments, the restated net loss is around $37.4 million. For 2024, they previously reported a net income of about $31.5 million, but after restatement, it is revised to about $21.7 million. Stock-based compensation expense is a key adjustment here. In 2025, as restated, this expense is about $28.5 million, up from roughly $24.5 million previously reported. For 2024, the restated expense is around $26.9 million, compared to a previously reported $17.8 million. This shows a significant increase in the stock compensation expense being recognized due to the corrected accounting. Their adjusted EBITDA for 2025, as restated, is about $136.1 million, up slightly from the previously reported $135.6 million. For 2024, the restated adjusted EBITDA is around $115.7 million, down from a previously reported $116.6 million. So, while the GAAP net income figures were overstated, the adjusted EBITDA figures are broadly similar, with a slight decrease in 2024. Next, let's look at the reconciliation for non-GAAP net income and earnings per share. For 2025, the restated GAAP net loss is about $37.4 million, compared to a previously reported $33.9 million loss. For 2024, the restated net income is about $21.7 million, down from a previously reported $31.5 million. The non-GAAP adjusted net income for 2025 comes in at about $54 million, which is actually lower than the previously reported $57.5 million. For 2024, the restated non-GAAP adjusted net income is about $39.3 million, down from a previously reported $49.1 million. Looking at diluted earnings per S-share for 2025, the GAAP diluted loss per S-share is restated to about $2.50 compared to a previously reported $2.27 loss per S-share for 2024. The restated diluted earnings per S-share is about $1.44, down from a previously reported $2.10, and the non-GAAP adjusted diluted earnings per S-share for 2025 is restated to about $3.53, a decrease from the previously reported $3.75. For 2024, the restated non-GAAP adjusted diluted EPS is about $2.62, down from a previously reported $3.27. This correction brings down the reported profitability figures across the board, especially for earnings per S-share. It is a clear indication that the company's past performance as reported was likely stronger than it should have been. The company also includes a cautionary statement about forward-looking statements. This is standard, basically saying that while they believe their current outlook is reasonable, actual results could be different due to various risks and uncertainties. They mention looking at factors disclosed in their SEC filings, including their most recent annual report. Now let's put this into context. Ducommun is in the aerospace and defense sector, a market that can be quite cyclical but also has long-term growth potential. Major institutional holders like BlackRock and Vanguard have significant stakes, indicating confidence from large investors. However, the fact that they are restating financial statements, particularly due to an error in internal controls, is a definite concern. This is similar to situations we've seen with other companies where accounting missteps lead to a loss of investor confidence and can impact stock price. For example, when a company like Clorox experienced a major cyber breach, the initial stock reaction was negative, and it took time to rebuild trust. While this isn't a cyber breach, the impact on trust in financial reporting is significant. A restatement of this nature, especially concerning stock-based compensation, can raise questions about management's oversight and the reliability of financial reporting going forward. The fact that they've identified a material weakness in internal controls is the most critical takeaway here. My biggest concern is the impact this has on investor confidence. A restatement is never a good look, and it means that investors cannot fully rely on the numbers they've been given. The company is promising to fix their internal controls, and we will be watching closely to see if they can do that effectively. The expected clawback of compensation is a positive step, showing some accountability. But the underlying issue with financial reporting controls needs serious attention. What I am actually looking for is a clear demonstration of improved internal controls and consistent, reliable financial reporting in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.